I'm Judy Shaw for NYSE Floor Talk. Joining me today is Jorge Ganoza. He is CEO of Fortuna Silver Mines. Jorge, it's great to see you. Thanks for joining me.
Judy, a pleasure to be here again.
A quick note to our viewers, this interview is for informational purposes only. The NYSE doesn't recommend any investments or investment strategies. All right, so Jorge, Fortuna has silver and gold mines located in Mexico, Peru, and Argentina. Tell us about Fortuna Silver Mines.
Yes, for us at Fortuna, this has been quite a journey. 15 years ago, we were three individuals, big ideas and little money. Today, as you pointed out, we operate a business throughout the Americas with three operating mines, over 3,500 people making Fortuna a reality every day. And our newest mine in Argentina is Lindero, where we concluded construction late last year. Our first gold at that mine was poured in October 2020. And we just reported our Q1 results, where you can see the strength of our business with sales of about $117 million for the quarter, a robust EBITDA at about $60 million, but more importantly, with an EBITDA margin of about 52% and strong earnings that beat street estimates, right, at 14 cents per share against a consensus estimate of analysts of about 10 cents per share. So the business is roaring. We have been focused for the last years on the construction of our third mine, which is a task that is coming to conclusion. We're still in the ramp-up phase, but the business is doing very well.
All right, so now, Jorge, in April, Fortuna announced a business combination with Roxgold, which is a Canadian mining company with assets in West Africa. What was the rationale behind this transaction?
Yes, that came as a surprise to some investors, that a company that has been associated for so long with Latin America jumps across the Atlantic into another continent. But to us, it's a transaction that makes the world of sense. Roxgold owns and operates a diversified portfolio of gold assets with production and a very exciting development project and a very robust pipeline of exploration opportunities. So we believe we're marrying here strength on strength. We believe that in this business, you build success over time, identifying quality assets and deploying operational and financial discipline to the development of an operation of the assets. And in Roxgold, what we see is a basket of quality assets and an operating team that shares a similar view and culture to us on how you create value in the business. So it's not just a combination of assets, but also talent. We are retaining the operating team, the exploration team, and the team that makes things happen in West Africa for Roxgold every day. So I'm most excited, not just about bringing this new pool of assets into the company and combining, but also from my position as CEO, I'm most excited about the opportunity to bring together two teams of engineers, geoscientists, and business people that exceed and are higher achievers, each on their own jurisdictions. And in addition to that, West Africa is a mining jurisdiction. If you see the growth in gold production and gold resources in the ground over the last 10, 15 years, there is no other region in the world that can match the expansion in those metrics that West Africa has exhibited. And you cannot do that only with geologic potential. You need governments that back you up over time. And that is what we find in West Africa. governments that consistently, in spite of political turmoil and political challenges and security challenges as well, but governments that consistently over time foster the development of responsible minings in their jurisdictions. West Africa, which is geographically a small area, if we pile together the production that comes from Ghana, Burkina Faso, Cote d'Ivoire, Senegal, and Mali, is the second largest world producer behind China. China produces about 380 tons of gold a year, and this region, which is small geographically, it contributes about 360 tons of gold per year. So, it's a well-established mining jurisdiction where we have presence from the largest gold producers and some of the most important and relevant mid-sized producers in the world.
Okay, so now Jorge, from a marketing perspective, what are the implications of a silver company acquiring gold assets?
That's a very good question. Fortuna has traditionally been recognized as a silver producer. Our silver contribution to revenue in Q1 was 39%, right? But the conundrum for silver producers is how to grow your business in silver and maintaining the type of margins and quality of assets that are required to have a successful business over time. And that's the truth. And that's why you see many silver producers over time gravitating towards gold assets. Because I'm going to say something that might sound silly, but a good silver asset is something you discover. It's seldomly something you can just go and acquire. So if you look at, for example, the iconic world silver producer, which we can think it's Pan American Silver. Silver contribution to revenue for Pan American Silver hovers between around 25-30%. For Fortuna right now, it's about 39%. That with this acquisition, that the contribution of silver to revenue will drop to about 20%, 20-25%. But you know what? We love silver. But more than our love for silver, we love the margins of our business. And as I stated before, Fortuna runs a business with EBITDA margins of 50%. And that is what we treasure the most. A business that has very robust margins. And we continue to pursue opportunities in silver in the Americas. We currently have 9 drill rigs turning in the Americas. And out of the 9, 8 are pursuing silver opportunities in exploration. But we're not just going to bring any silver asset just to increase silver production. It has to be constructive on the margins of the business as well. And that is what we find with Roxgold. These gold assets, this basket of gold assets with production, development, and exploration, all offer the opportunity to be highly constructive on the margins of the business. The combined company will have an annual production of 450,000 ounces of gold a year. That would be gold equivalent, with EBITDAs of about $500 million a year. But more importantly, retaining EBITDA margins in the range of 40 to 50% margins over sales.
Well, Jorge, it's been wonderful to talk with you. Thank you so much for joining us on NYSE Floor Talk.
Thank you for the opportunity, Judy.